Welcome everyone. This is a recording of my very first webinar ever, and as you can see, it is almost 2 hours long. So I am posting this live to YouTube because I know a lot of people missed my webinar who wanted to be there, who wanted to see it. So I want to make sure all of you guys can, get the chance to watch this. It is extremely informational. If you are going to sit down and watch it, please bring a paper and pencil and get ready because I am literally giving you an A through Z course on how to start day trading and my strategy on day trading. So please, please, please take notes, do what you can, because this is probably one of the most impactful and best courses you will get on YouTube for free. But anyways, please enjoy. All right, we're going to be getting started. All right, can everyone see this now? Yes, no, maybe. Just want to make sure we're all good here. Okay. All right, awesome, awesome, awesome. Yeah, so I will go over everything, all of your questions. Don't worry, but first we have to get through the basics for my people who are beginners in here because we do have a lot of beginners. So I'm going to go through that. But now that everyone is in here, I do, quickly want to introduce myself once again. I know you guys all heard this already, but again, my name is Sophia. As you guys already know, this is my very first webinar I've ever done. I've done a lot of class sessions with smaller group sizes, but yeah, this is the first bigger webinar. But again, in this webinar, I'm going to be dropping a lot of really important information. So I'm going to need you guys to get a notepad, pull out your notes app on your phone, whatever it may be. I need you guys to take notes on this because there's going to be a lot of information. So first thing I do want to clear up and, talk about what the main focus of this webinar is today is a lot of traders, especially if you're newer to the market, you will tend to blame your psychology problems for losses and for being unprofitable when usually it has something to do with your foundation and the strategy you're using and not trusting in that strategy. So blaming psychology is the easy way out, and having a bad strategy is actually the reason why you rush your entries and you feel uncertain taking trades and don't trust in your strategy. So it is my opinion that it is extremely important to first understand your strategy fully, and that is exactly why I'm going to be sharing with you guys my strategy. So again, all questions will be answered later, I promise. All right, so we're going to get started now. You guys can all see my screen. So that is really awesome. And make sure to stay to the end because I have a very exciting surprise for you all. If you don't stay till the end, you're going to miss the surprise. So you better stay here. Anyways, let's get started. So in this guide, I'm going to be going through the foundational basics you need for trading. I'm going to be talking about how options work, and I'm going to be going through economic data and resources that you can find to look at economic data, and then understanding price action, which is something that is really important and a lot of traders miss. They just jump into strategy, which wouldn't make any sense if you don't understand price action. Number 3 is the foundation to my strategy, and I'm going to be focusing on exactly what I use when I'm taking my day trades, and then focusing on entries, exits, setups. Then I'm going to give you guys some real examples and mistakes to avoid, also with some risk management tips. So let's get started. First, I do want to, share my brokerage statement with everyone. This was from the month of May to the end of May because as someone who is teaching, I feel like it is extremely important to, actually have the proof behind the progress and not just be a random teacher. So this is my brokerage statement from last month. and this is just a general explanation of myself. So I've been trading for 4 years now, and I also have been teaching trading for about a year. Teaching has always been my passion. Even when I was younger, I used to be a tutor. So now that I'm able to actually be a teacher for something that I have so much love and passion for is the greatest thing ever. And I absolutely love being able to, watch everyone around me really succeed. So that is a little bit about me. Um, but yeah, we're going to quickly just talk about, how to become a day trader and what it really takes, because another misconception is that it is easy and that it's quick money. And I'm here to tell you that it is definitely not, and it will take you a lot of time and consistency and hard work, but is 1000% very worth it. So trading is not, gambling. Trading is decision based. A lot of people mistake trading for gambling or use it as a way to gamble, and that is not how you become a proper day trader. You become a proper day trader with discipline, with edge, and risk control, and your results become consistent over time. And that is what I will be showing you guys today, my strategy and how I became consistent. So you control when you enter, how much risk, and how you exit. It's not luck. Trading is not luck. Trading is not gambling. Trading is a real skill, and it takes a ton of hard work and dedication. So to become a day trader, you do need to have full emotional control over yourself. And these are just some other traits of successful traders. And you guys will be sent this entire guide, so I really don't need to read over every little thing for you all. But yeah, so let's just get into it. What exactly is day trading? So day trading is buying or selling financial assets such as stocks, options, futures, crypto, forex, etc. within the same day and no overnight hold. So with day trading, what I mainly focus on is small intraday price movements with tight risk. So here are just some examples of types of ways you can day trade. So we have Tesla, which is a stock, obviously. NASDAQ, which you can trade futures, NQ. And then we have crypto, Bitcoin, which you can trade. So what I'm going to be focusing on in this webinar today is going to be options. So there are many different types of ways to trade, and they're all great. I'm an options day trader, and that is what I focus on. But real quick, I'm also going to definitely show you guys a paper trading setup as well. And I'm going to drop in chat the paper trader that I recommend you use. But we're not going to get into too much brokerage stuff right now. I really want to just focus on the basics. But yeah, let's get into the foundational part of day trading and understanding economic data. Many, many traders skip over this, and it is so important to understand economic data. If you're day trading and you ignore news, or you don't have a calendar up, or you're not watching what type of news is coming out, you are so behind. When news comes out, the market will move in a very volatile way, in a very unpredictable way that our strategies will not be able to, keep up with. So we have to be very aware of any high impact news that comes out. And I'm going to drop in chat a link to two websites that I mainly will use. But I'm going to do that right now so you guys can download them. You can open them up, keep them for yourself. So yeah, some examples of high impact news is going to be CPI, which is the Consumer Price Index that measures inflation. Another high impact news is interest rate. So around once a month or every other month, we also get what's called the interest rate decision, where this guy named Jerome Powell comes on and decides to speak. So we do not trade when this is happening. We do not trade when, he is making the interest rate decision, because that makes the market extremely volatile. So again, questions, I see your guys' questions, and I promise I will, get to them and I will answer them. So yeah, real quick, in chat, I'm going to be dropping these links. I might have to respond to someone. Sorry, I'm responding to this person because it's not just letting me drop them. Okay. Sorry about that. Yes, this is live. Okay. Anyways, So economic data news actually seriously matters a lot, and a lot of traders, do not take it seriously as it is meant to be. So that is kind of the first foundational focus of day trading is understanding basic economics. It is extremely important. So now let's get into it a little bit. So we're going to talk about ETFs for right now. So we did go through, stocks, and I assume most of you guys have a grasp on what stocks are. They are the, right to buy shares of a company. So when you buy shares of stock of a company that is publicly traded, then you will be holding that public company. You will own part of that public company. So, but let's get into what are ETFs. And ETFs are something that I trade day to day. So that's why it's really important for me to go over these. So ETFs are exchange traded funds. So it's like a bundle of stocks that you can trade all together at one time, which is super awesome. The main one that I trade is called QQQ. And this specific ETF stands for the NASDAQ. So it mirrors the NASDAQ markets and all the tech stocks which are in the NASDAQ. If you guys don't know, the NASDAQ is based upon big tech stocks, which is also what I mainly like to trade. So why do I use ETFs? Why do people buy ETFs? Why do people trade ETFs? They give you easy exposure to multiple different companies. It moves just like a regular stock. You can buy and sell it, and you can also trade options on it. So some popular ones for day trading, like I mentioned, were QQQ and SPY and IWM. So SPY is going to stand for the S&P, and IWM is going to be for the small caps market. So that means, stocks with small, capital. But I will mainly stick with QQQ, and I will trade SPY sometimes. So tips for just some options traders and understanding how ETFs work in the options market is ETFs have high volume and tight spreads and liquid options. So that means these ETFs, especially when you're trading options on them, will get quick moves. So do also trade them with a lot of caution. Can I give a brief explanation on the basics of future trading? Let me get through options, and then I will give you guys a, basic, I don't know exactly what that says, but the basics to futures as well. I don't really trade futures as much. I do focus more on options, but I will still be able to explain that, of course. So options 101, what is an option? How do you even trade options? Well, I will show you guys on the next screen. But for those of you who are very beginners, an option is a contract that gives you the right, but not the obligation, to buy or sell 100 shares of a stock at a specific price before a certain expiration date. So when you buy a singular contract, that gives you control of 100 shares. So if I were to buy a Tesla contract, that means I now have control of 100 shares, but I don't own these shares. I just own the contract itself. And we will further get into that because for my beginners, that might not make too much sense for you right now. But buying options contracts lets you potentially make bigger gains with smaller upfront costs. As many of you guys know, shares cost a lot of money and they're not as easy to just day trade, as everyone knows as well. A company like Tesla, which is currently trading at almost $330 per share, is going to be a lot harder to day trade versus day trading options on it, which then you have choices to, prices of the option, and we will also get into that. I don't want to get too ahead of myself and confuse any beginners here. But there are two main types of options. There's going to be what's called a call option, and there's going to be what's called a put option. So a call option gives you the right to buy 100 shares at a certain price in the stock before the stock goes up. A put is the right to sell 100 shares at a certain price. So when you buy a call, you are saying you think this stock is going to go up to this price by a certain date because all options have an expiration date on them. When you buy a put, that gives you the right to sell 100 shares at a certain price before a certain expiration date. So just to clear that up, and this is a little example. So a call oops, my bad, guys. Did not mean to do that. So a call option is the right to buy. So this is a little beginner friendly call option example. So let's say Apple's stock is trading at $100. We know it's not trading at $100, but just for example purposes, Apple is trading at $100. Let's say that you buy a call for 105, which means you're saying that you think Apple is going to go up to 105, you know, by the end of this week because your contract is expiring at the end of the expiration date. Now, the expiration date you're purchasing for this week in this example, so just imagine that. And the total cost of the contract is going to be $100 in total. That doesn't have anything to do with the Apple share price itself. So keep that in mind, and I will explain that later. So this means you're betting that Apple will go above 105 fast because your contracts expire at the end of this week. When your contracts expire, that means, and let's say your contracts expire and you don't sell them, you just let them expire. That means you will lose the total value of the contract. You will lose the money you put in. So let's say you do buy that 105 call and it costs you $100 per contract if you buy one contract, and let's say Apple runs up to $110 per share. Your $1 contract is now worth $3, which means you have to multiply it by 100 because you're actually buying the right to 100 shares for each contract you purchase. So your $100 contract is now worth $300. You sell it and you make a total of $200 profit. Now, I'm going to be honest with you guys, options is not this easy. This is just a quick example guide for you all so you guys can, understand it a little better. So what exactly are options? So this is a setup on my Robinhood. So this is showing you guys exactly, how your option setup would look like. I know for some of you guys who are in here who are not beginners, you're probably like, oh my goodness, can you just get to your strategy? I promise I'll get to my strategy soon. We just have to get through the basics. So what are options? This is going to be your options setup page. It may look different depending on what broker you're using, but this is on Robinhood Legend. So in the middle of the screen, this is your strike price. So the strike price is what you think, the stock that you're trading is going to go to. So right now we're looking at QQQ, which is trading at $532.57 a share. So if I were to purchase a 533 call, I'm saying I think QQQ will go up to 533 by tomorrow since these contracts are 1 day out expiration date. So on the left side of my screen, we have our calls. On the right side, we have our puts. Okay. And you may be asking, what are all these like random other categories? So bid is what buyers are asking. So me and you who would be buying the contracts, that is what we're asking for the contracts. The ask price is what the seller of the contracts are asking for them. So since this current, if I stick with 533 call on QQQ, the ask price is going to be priced at $283. So each contract would cost me $283 to purchase. Now, that is the asking price, and that's what sellers are asking of me. But us buyers, we can put in, a separate price for that and try to get filled on those orders. So the current bid price from us buyers is at $280 a contract. So that would cost you $280 per contract. All right. Is that making sense for everyone? Let me know. We will get to all that, guys, I promise. Okay. Awesome. Can't see my screen. Oh, is that one should be able to see my screen. I'm not exactly sure why. Okay, so I see what you're confused about there. So the price of a contract, you have to multiply it by 100 because you're buying the right to 100 shares. So as this contract, as this contract does say it costs $2.83 to purchase, you have to multiply that by 100. So in total, one contract would be costing you $283. Okay, awesome. Just making sure you guys can see it. Does that make sense? I want to make sure you guys are all good with, the basics of options and you have a complete understanding. All good on there. If there's something I need to go back over, something you're confused about, let me know. And something important to note, when you do buy options contracts, you're not buying shares at all. You do not buy shares. You have right to the contract until it expires. And that is that. So now we're going to get into, some different types of contracts. So we have what's called weekly options contracts. So most larger stocks that trade, for example, like Tesla, Apple, Nvidia, Amazon, Meta, all of those stocks have contracts that expire every single Friday. So you cannot buy what's called a zero DTE or 0 days to expiration contract on those stocks unless you're trading them on a Friday and buying a zero dated contract. So these contracts are generally going to be cheaper because they only last for 1 week, and we'll get into exactly why they would be cheaper, and that will make more sense in a little bit. But these will move faster and they are going to be more risky, but more rewarding if you can follow a strategy properly and manage risk properly. So weekly options contracts is what I mainly trade. And when I trade ETFs like SPY and QQQ, I will trade what's called 0 days to expiration. So with 0 days to expiration contracts, the day that you're buying the contract, it also expires on that same day. So at market close, the contract would just be expiring. So you want to make sure, you're in and out of those contracts generally pretty quickly. Those are not contracts you would look to hold on to. So these, again, are only available every single day on QQQ, SPY, IWM, so ETFs. But when you're trading general stocks, you're not going to have the option to buy a zero dated contract unless it's on a Friday. Does that all make sense so far? Yes, yes, yes. Are we good? Yeah, zero dated is not gambling, but a lot of people treat it as gambling. So I don't normally recommend, if you're a beginner, to be trading zero dated contracts at all. So now we're going to talk about what are Greeks for options contracts and get into that. So I only have 4 of the 5 Greeks here because, again, I want to, keep this part of the webinar a little shorter, as short as I possibly can keep it. But there is another Greek called rho, and I'll quickly explain that. So the main Greeks that I look at, and this is exactly why options contracts are priced certain ways, because of the Greeks. So options contracts are not priced based upon the current share price of the stock you're looking to trade options on. They're priced on something called the Greeks. So we have 5 Greeks, and the 4 main ones that I tend to look at for day trading is going to be delta, gamma, theta, and vega. So delta will tell you how much you profit if the stock rises or falls. So down here on the specific contract, if this stock that I have this option on goes up $1, the contract would raise by 50 cents or $50, depending on the price of the contract. Gamma shows you how fast that profit can accelerate. So gamma and delta will be added together. And gamma and delta will always be positive for call options. And then for put options, delta and gamma will be negative. And then theta is a really big one that a lot of traders do miss. So that is our, time decay on options. So that'll tell you that every single day costs money. The longer that you hold an option for that has a close expiration date, that'll show you how much value it'll lose once you start getting closer to that expiration date. So generally with zero DTEs, theta is going to be pretty high because your contract expires on that same day. But that is really important to look at and watch for, especially if you're swing trading. Theta is still important when you're day trading, but generally, once you get into the flow of day trading and you have a general understanding of what you're going to be trading every single day, you already kind of know what type of theta is on the contract. And then rho is just used as like if our interest rate goes up or down, how it will affect the contract. Not super important. That is more used for people who swing trade options or do leaps, which is, longer term options holdings. So that is what rho is important for. It's not super important to us who are day trading options. So here are some resources for charting, and obviously we'll get into all this. And then paper trading. So paper trading, I do recommend you paper trade on Webull. So you can just go to Webull's website, create an account, it does not cost you any money, and start paper trading through there. So when you are a beginner, you cannot use a live account. Please, whatever you do not use a live account when you're first starting out with options. And live account means, your real money. Please don't do that. And it also is important to state that for options, there is no prop firms that are available. I don't think there will ever be able to, be prop firms available for options. That is mostly just for futures and for Forex trading. So make sure to not get that confused. But Webull is the site I do recommend for paper trading options. And then charting platform, which is free, is TradingView. I don't use TradingView, but the charting platform that I do use is not free, so I don't recommend it, especially for, my beginner traders. But yeah, I'm going to drop in chat the links to this as well. I'm sorry. Luke, I'm going to have to type it to you. So you guys have those links. I don't know why Zoom won't let me send just a regular chat. But yeah, hopefully you guys can see that. Make sure you guys can see that. But yeah, okay, awesome. If you guys have any other questions, just, let me know. I'll make sure to answer them as we're going through. So now it's time to actually get into trading, and I just want to quickly go over the basics of viewing a chart. So the charts that I use are going to be called candlestick charts, and it is going to be really important that you understand, what this candlestick actually means, what even is a candlestick. So a singular candlestick shows how many sellers or buyers were in that certain time frame. So this is going to be called a bullish candlestick because it is a candlestick going upwards. This is going to be called a bearish candlestick because it is one going downwards. And obviously they're color coded, so that's easy enough for you guys to view and for you guys to see. So on a bullish candlestick, our open is going to be right here. And this is called the body of the candle. And the close of the candlestick is going to be up here. And now these are what's called wicks. So wicks shows us where price went within that time frame. But this shows us where price opened and where price closed at. And it'll make more sense once we get into it a little more. So on a bearish candlestick, you have open right here. This is the body of the candle. You got close, and you got the low of the candle, which is the candle wick. And you have the high of the candle, which is the candle high of the wick. All right, how are we doing with that? Do we understand it well? Let me know. Anything I need to go over? Okay, awesome. There are no prop firms that trade options. Okay, so now that you guys are all doing well, let's continue on. So I'm going to talk about some charting timeframes and generally how to just read a chart from a daily standpoint. So timeframes that you have are going to be the 5-minute, the 15-minute, 30-minute, 1 hour, 4 hour, and daily. You have more timeframes in this, but these are the main timeframes that I just use. And so I'm going to be sharing that with you guys today. So the 5-minute time frame is mainly used for your entries on intraday scalping positions. Just intraday positions in general is what I use the 5-minute time frame to actually enter those trades in and to watch my trades. 15-minute is going to be intraday movement, short-term trends, also good for intraday trading as well. The 30-minute is a clearer view of price structure. I also use the 30-minute as a part of my strategy, which I will explain later. 1 hour, also a very clean intraday bias and view of price action as well, which again, I'll explain how I use all these timeframes in my strategy. 4 hour is big picture moves, also for checking out, where the market is generally at in the current time. The 4 hours most likely going to show you a couple weeks to months back, depending on how big your screen is. And the daily is overall trends, key levels as well, which I will talk about. So in this little picture right here, we have, a general view of how the market trades. So when the market is in an uptrend, we will see higher highs and higher lows. When the market's trading sideways, we will see this trading range. And when the market is in a downtrend, we will see lower highs and lower lows. So that is what general market structure is going to look like, and I will show you guys that on a real chart. So this is QQQ on the daily time frame. This is dating back to the beginning of November or mid of November, all the way until now. So as you see here, from around starting February into April, candles were forming lower highs and lower lows. So we were getting a general downtrend. From May until now, candles were forming higher highs and higher lows. And right here, we have candles are indecisive, and that equals that choppy price action that I showed you guys on the slide earlier. All right, how are we doing? Because I'm going to start getting into strategy. Let me know. I definitely want to make sure have any questions answered that you guys need before I continue on. Anything? Awesome. I'm glad you guys are understanding it. I'm really happy. That makes me super happy. So let's get into strategy then. So this is kind of like the turning point in this webinar. So up until now, I've explained to you guys, the very basics. Obviously, if you're a complete beginner, you do need to go more in depth and, go over that all once again. And I have many videos up on my YouTube talking about the basics of trading. But now I'm going to get into my strategy and, what I use for day trading. Who's excited? I hope you guys are. So it's time for strategy. So this is going to be the first little bit of what I use in my strategy. It is called support and resistance. I'm sure you guys have heard it. This is not a new concept. I'm not going to tell you guys, hey, I made up this whole new strategy. I can guarantee you there's probably not a single, newer trader who has made up any sort of strategy. All strategies, that are mainstream and used were made up many, many years ago. So first bit of my strategy is using support and resistance levels. So support, you're going to think of it as a price floor. So it's going to be a price level where the market has bounced up before, where we've seen literally support. So in this little example of exactly what support is. So every time we reach a specific support area, that is when buyers start to step in and push the market up. So as we've seen here as well, we now have a resistance level, which as we've seen a couple times now, price has, rejected breaking above this resistance until we finally did. But resistance, you're going to think of as that price ceiling. So it's going to be a price level where the market has rejected down before. This is where sellers will start to step in and buyers will no longer be present. Price will start exhausting. So again, support, think of it as a price floor. Resistance, think of it as a price ceiling. So how I generally spot support and resistance levels is I look for areas where price has bounced or rejected multiple times. I do not use I do not use diagonal lines, no trend lines. I use horizontal lines for these support and resistance areas. I don't actually draw them out on my chart normally. I will write down the specific levels that I mark out. As my students know, I send them my levels every single morning. But there are a few other ways you can view support and resistance levels as well, but today I'm just going to be talking about how to view them on the chart. So, any questions from that so far? We'll talk about fake outs, and I'll explain to you guys exactly how I deal with fake outs. Okay. So sounds like we're all good on that so far. So I will be moving on. So generally with support and resistance levels, I will take them off the 1 hour and the 30-minute time frame. And after I'm done showing this, I'm going to show you guys, a real replay example in TradingView. I haven't even picked out a stock or picked out an area. So it's just going to be real time for me. We're going to see how this works, real time. But anyways, so quick example of QQQ on support and resistance, and this is again taken on the 1 hour time frame. So as we see here, we have a nice resistance level at 521.94. We've seen price touch up on it multiple times and reject it multiple times, and no holds or breaks above this level. Now, if we saw a candle, like say this candle, fully held above our resistance level and, we did not get a close back into the resistance level, that would mean this level is now broken. All right, but we'll go over that. And then we now have our support level as well on QQQ, and that is going to be at this 512.34 area. So this level, again, was tapped into multiple times at multiple areas on the 1 hour chart, and price did not break and hold below it. We tapped in multiple times, and the fact that price got a bounce from it means buyers started to come in here and sellers were weakening. So does that all make sense? Okay. Everyone, let me know. That makes sense to you all? Do we have any questions on that? All right. Support and resistance is generally pretty easy, which is why I also love using it. But okay, so why the 1 hour and 30 minutes? So 1 hour, this is the time frame I use for this example. So 1 hour time frame is really my bread and butter for finding my support and resistance levels for intraday trades. Every morning pre-market, I go and mark out my levels. If any have been broken from the night before or the previous day, then I mark out, different or new levels. But on the 1 hour time frame, these levels are generally going to be much stronger. If you try to take levels from the 5-minute time frame, they're not going to be very strong levels at all because you're taking it from such a small time frame that is only showing you, a small amount of price action versus only 1 hour, you're going to see a much larger amount of price action and you're going to see much stronger areas hold up. So 1 hour and 30 minutes is, generally where I will take support and resistance levels, mainly the 1 hour. And then I also look out on the 4 hour and the daily chart as well. For example, as of right now, if you are currently trading, you know that QQQ is at all-time highs. SPY is nearing all-time highs. So I will, look out on the daily or the 4 hour to get an even wider, area of levels that are very strong. So before market open, are you looking at the 1 hour from the last hour of market close the day before? Okay, so when I go on the 1 hour chart, it's generally going to show me a couple days time. So that is generally what I like to look at is the 1 hour from like a couple days time. Taking support and resistance levels just from, pre-market or the day before, they're generally not going to be as strong. How many days in the past am I looking when drawing levels? So this really depends on the price area where we are at currently. For example, let's say, price broke below a low we haven't seen in a month. In that case and scenario, I would then have to look back at least a month's time to find where those support and resistance levels were at, because now we have broken below an area we haven't seen in a while. So support and resistance levels will really depend, but I'm going to take you guys through a real example of me looking at them on TradingView. So don't you guys worry. Okay, so the next area to my strategy is supply and demand zones. So supply and demand zones I pair with support and resistance levels, and they work like magic together. I love them together. They're amazing. So generally, demand zone, you're going to think of it as that support area. So within a demand zone, you're going to find a support level. And demand and supply zones, they're zones. They're not just specific levels like support and resistance. So generally, depending on what stock you're looking at, it's probably going to be like a $3 to $5 range of a zone. So for demand, this is where buyers were excited here. Price could rise again if we tap into the demand zone, and if we hold up support in the demand zone. Supply zone, sellers were aggressive here before, price could fall again. So supply, you want to think of it as like up here would be our resistance level, and demand, we have support. So demand zone is a price area on a chart where a lot of buying happened in the past, especially. So again, I find demand zones and supply zones the same way I find my support and resistance levels. And it'll just show me those key areas, and they're really, really helpful to use in confluence with support and resistance. Okay, makes sense so far. Any questions there? Um, oh, all good. Okay. Oh, yeah, so I did answer that, but if you want to write this down, my preferred support and resistance zone time frame that I mark out is going to be the 1 hour time frame. You can use the 30-minute. The 30-minute works well too, but the 1 hour is the greatest. I do not use fair value gaps. I do not use smart money concepts when trading individual stocks. I get a lot of questions on that. Generally, when you are trading individual stocks, prices of stocks don't move in the way that futures would, in the way that you could utilize smart money concepts on futures. So that is why I generally do not use any smart money concepts with trading individuals. Okay, now let's get into a real picture example. So this is a demand zone on the 1 hour time frame on QQQ. So we see price trade between 511 and 514 within the zone, and we've seen it, multiple different times. We've seen price dip into it, get a break out of it. We've seen price trade, break back into it, trade within it, get a break back out of it. So this is generally going to be a really strong demand zone. And as you see from the last example, 512 was a very strong support level on QQQ in that example, mixed with this nice supply zone from 511 to 514. So we will add those together in a second. So why does this zone matter though? Again, price bounced, price traded higher, and then later returned back to 511, 514 area. This is showing us this is a really strong demand zone, and this is a place where you could take an entry on a trade from this demand zone. So just one trade idea from this example. A trader could plan to buy when the stock comes back to this zone, wait for a bullish signal, wait for a bounce on a support level, and target that nice reversal back up to previous supply zone. All right, any questions on that so far? Oh, we got a lot of Q&As. We'll go over would demand zone be the zone above our support? Okay, so the demand zone would be, where your support level, where your support level generally is. So we will connect those together and I will show you guys like a real example of me marking these out on my chart. Okay. We will also talk about confirmation. I just want to get through the basics real quick of my strategy, and then we will actually get into how you use the strategy. So I will answer all those questions shortly, I promise. Okay, so how you mark out the supply and demand zone. Let's go back. So how you mark it out is where you see, candles consolidate around in this area. And then we normally will see a bounce from this area as long as we don't break below our demand zone. And when we do see that bounce, we are targeting the upper supply area. And same with supply, it's where you see a consolidation of candles and sellers start to come in and we see a break below and out of our supply zone, then targeting back to demand. Just like we kind of see on this demand zone example, consolidation of candles. And this is on the 1 hour time frame. So this is about a 5 hour span of time between here. But that is how you generally will mark it out. And then let's get into supply. So we have this really strong supply zone on the 1 hour time frame on QQQ. So in this area, we see price trade between 518 to 521, making it a supply zone. And if you guys remember from my support and resistance example, 521.94 was a very strong resistance level on QQQ, which exactly lines up with our supply zone. So here we see price consolidate, trade sideways between this 518 to 521 range, marking that out as our supply zone. After this consolidation, we normally see, breaks out of this area that you can trade off of, breaks out of this area once again, and this confirms it is a supply zone because once we enter it, we start to see price weaken and sellers come back in. So why exactly does this, zone matter? This is a classic supply zone setup. Price revisits this area multiple times and selling pressure comes in, causing, price to then drop out of this area. If we were to break out above it, let's say we broke out to 522, that would no longer be an area that I'm looking for. I don't know if your question was, no, this is just a picture for supply. Just marking out supply. I will show them together. But I think your question was for the last slide that I showed. So someone asked, in this case, if you'd want to buy, you should wait the break of the zone or take the trade from the support line. So normally, let's say we're in this, we're sitting inside of this demand zone. Sitting inside of this demand zone, again, like I said from the example earlier of support and resistance, we have a support level at 512. So normally I would wait until we tap into that level and we show, a strong bullish confirmation candle of us then breaking out of this supply zone to take that trade. So I would want to see a break out of this 514 to then target the upside back into our supply zone. I'll answer that right now. So someone asked if I use any indicators, any of the EMAs. I do use a couple EMAs. I don't use any like real indicators. When I'm trading, I don't find them super helpful. EMAs, I can go over, but I generally only use EMAs for viewing where price is at currently. So viewing if price is bullish or bearish in the current time frame. I don't use EMAs to confirm my trades or anything like that. Okay. So this is our picture example of supply and demand. So this is them now paired together as we can see, and this is on the 1 hour time frame, the 30-minute time frame instead of the 1 hour time frame, which is generally where I like to mark out my supply and demand zones. Support and resistance better on the 1 hour, stronger time frame, but supply and demand will show you a little bit more of a story on the 30-minute time frame because we do see more consolidation candles and it is a bit more helpful. So as we see from this 520 to 522 on 30-minute time frame, we have a very nice supply zone on QQQ. And in this demand zone from 512 to 514 on the 30-minute time frame, we see price trade into it, and then we get a nice breakout and back above into the supply zone. So you could have taken 2 trades based off of this price action. You could have taken the breakout of supply, traded back into demand, and you could have taken the upside of the breakout of demand into the supply zone. Yes. You guys, I don't think you guys can see questions for some reason. Indicators won't help you read PA. Missed that play today. Oh, this wasn't from today. But anyways, yeah, indicators, generally, I don't love using indicators. They just really don't help me personally. Some people, they help, but me personally, they don't. If you like to use indicators, that's all you. But anyways, so now we're going to talk about how exactly I actually trade off of these levels and zones. So what I use is called the BBR strategy, the break, bounce, reject strategy. So I used it with support, resistance, and supply and demand. So this model gives you 3 ways to enter trades based on how price reacts at a level. So exactly like what someone asked earlier is, does this strategy work in all types of market conditions? Is it a neutral strategy? It 100% is a very neutral strategy because it gives you 3 ways to trade it. You can either trade it from breaks of levels or zones. So when we get breakouts of specific areas, you could trade it off bounces on support, and you could trade it off rejects of resistance. So that is why I love this strategy so much. And it is, again, pretty simple. And generally, you can use it across all market conditions. Again, I'm not going to tell you that it is just, you'll be able to just understand it right away and get to trading tomorrow. If you're a beginner, you have to really put in the time and practice and paper trade and back test it and forward test it with paper trading to really understand it and to get a good grasp on the strategy itself. But it is generally pretty simple. So first way to trade it is that break. So if price breaks above or below a resistance or support level, you can trade off that break. Now, I don't enter immediately if price breaks through one of my levels. What I wait for is a 5-minute candle close above one of these levels to actually enter that trade. If you don't wait for confirmation and you just see that candle wick go above your level and you take the entry, you are bound to get stopped out because there was no confirmation there. Does that make sense so far? So first we have break. Break of support, resistance, supply, demand zone. I assume that makes sense to you all. Okay, awesome. Next, we have bounce. So price taps into support or demand and bounces up, or price taps support or resistance and bounces down. So you enter off the bounce. Once confirming candle forms, your stop goes beyond the zone. So normally for options, stops will be set a little bit different, but I'll talk about that in risk management. So the next model we have is the bounce. So either we bounce from a support zone or we reject from, or price taps a resistance or supply and bounces down. Off the bounce, you confirm by the candle forming and your stop goes beyond the zone, which again, I'll talk about stops in a second. And then we have rejects. So price taps a key level, but instantly rejects it. So usually a sharp wick or fake breakout, you enter in the opposite direction of the attempted breakout. So this is ideal for, liquidity grabs or what's called fake outs. So you'll usually see this happen, again, when we see breaks and they're not a confirmed break and you try to enter off that break, you will get stopped out if you don't have a confirmation. So this is kind of like a little setup of how each of these look. So we have the break, we have our resistance area. We break out of it, we get a nice retest, and then a continuation up. So once we break out of a resistance area, that now turns into your support zone. That's really important to note. And vice versa. Once we break through a resistance level, once we break through a support level, that level now turns into resistance if we hold below it. Next is the bounce. So we get a nice bounce on support, and then entry there, and a continuation up, and then we have the reject. We get a rejection from a resistance level, and we get a nice move down. Okay. Makes sense so far. We're good? Okay, awesome. So this is like setup of the trades that I would be taking, and fully understanding them. So wait for price action confirmation. That's what PA means. So on the 5 or 15-minute momentum shift, so clean retest closes, not just wicks. No confirmation is no entry. So if I'm trading a break, I'm going to wait for a 5-minute candle to close above my level that I have marked out and trade off of that break and target the next area. Either if I'm trading a break on resistance, I'm targeting the next resistance or supply level above there. If I'm targeting a break on support, I'm going to be targeting the next support level or demand zone area. Step 4 is then now picking the right contracts. So if you're a beginner, this will take more time for you to understand. I did go over the Greeks. I did go over exactly options, but picking your contract will depend on the account size that you have, and choosing how many contracts you should be in will depend on the account size that you have. So all of that just kind of depends on, again, what amount you guys are trading with, if you're paper trading as well. So although when I'm normally entering my day trades, strike price will be at the money, which means that the strike price is the same current share price of the stock. Or I will also choose one strike out the money. So that'll mean if QQQ is trading at 533 and I want to buy some calls, maybe I'll purchase some 534 calls, one strike out of the money. Generally, because contracts that are closer or at the money are going to get a bit of a better movement, especially if you're not targeting, a very large move. So if the expiration is 2 to 3 days out, or those weekly contracts, sometimes those can be more expensive depending on what you're trading. So just be aware of that. You may not be able to choose those one strike out or at the money contracts for those type of contracts. And then I would say avoid zero dated contracts as much as you could. And unless it's like an A+ setup, unless you are a more advanced trader, zero dated contracts are okay, but I generally wouldn't. So now step 5 is managing the trade. So stop loss just beyond the level, so above supply resistance or below demand support. Specifically for options, I will use a negative 25% stop on my contracts. Does that kind of make sense so far? What type of account do I trade in? I trade on a cash account, live cash account, if that makes sense. Okay. So step 5 is managing your trade. So stop loss, or I just went over that, but next thing, target. So usually I'm targeting like a 2-to-1 risk to reward ratio, and I will go over that in the next slide of risk management. Don't hold through chop or through indecision. Next is risk management basics. I'm just going to quickly go over this. So risk management protects you from blowing your accounts. Obviously, you guys all need to be using risk management no matter what. I don't even care if you're using a paper trader. You have to practice risk management. That's the most important thing, you know, to do. So generally, I will risk around 3% of my account per trade. So if you have $1,000, stop out at negative $30 max on a trade. You can, loosen your stops a little bit more. But if you're trading with a small account like $1,000, you generally want to be picking contracts that are cheaper anyways. So then you do have some more room. You have to use a stop loss every single time. You have to set your stop as you're entering the trade. And you have to know exactly where you're going to stop out when you would exit the trade. That all has to be pre-planned before you even enter a trade. So don't move your stop loss when you're in the trade unless you're moving it to break even or you're moving it up 10% because your contracts are now in profit. But never move your stop lower than it is already set out. So like I said in the previous slide, I normally aim for a 2-to-1 RR or even a 1-to-1 RR is still good. So what that means, if you're risking $50, you generally want to aim to make, sorry, that says 100 to 150. I meant to put $50 to $100. So if you're risking $50 on a trade, generally you then, want your ideal profit target for a 1-to-1 trade is going to be $50 profit. If you're risking, $50 and your aim is a 2-to-1 risk to reward, you generally want to be targeting $100 profit on the trade and your stop at negative $50. Definitely implement a daily max loss rule for yourself. Max 2 losing trades for the day. You're done. Once hit, you walk away from the charts. You get off the charts. You stop trading. No revenge trading. Discipline is survival in the trading world. So, and another really good tip is size down in unclear conditions. This whole month of June, I've barely been taking too many trades and I've been sizing down a ton because of these super volatile market conditions and choppy market conditions from day to day. So that is generally what I will do. Next, I'm going to talk you guys through a QQQ call example. So this is a trade that I took a little bit back. So this is on the 1-hour time frame. We do have a strong, support level right at this area from we have a strong support level at 514.51 with a strong demand zone from 514 to 517 area. No, by size down, I mean, like if we go back here, size down, I mean, you enter in the position with a smaller amount than you normally would. So let's say normally you're entering positions with $1,000, maybe in these more like unclear conditions, you would just be entering with $700 to $800. So yeah. Anyways, this trade example, again, we have a very nice demand zone and this nice support level sitting right here. As we can see, and this is all marked out on the 1-hour chart. So entry on trade, and again, I'm gonna actually go through a real trade with you guys because it's hard to try to just show with random screenshots. So I'm gonna go through it. But yeah, looking at this, and I entered this around this area right here, around this hold up of support and back into our demand zone. So we did get a really nice bounce on this support area, and this is now in the 5-minute time frame where I will normally be entering and looking to enter my trades in. So entry after the bounce and after the confirmation that we were going to break out and above this demand area, because one place you guys will go wrong in trading is entering during, a choppy area, choppy market. So one reason I did take this trade here is because it was near market open. So generally near market open, we have very good volume, which is super important to note. Good volume near market open, which means we are primed for moves, primed for good moves. So first, when market opened here, we did see some downside, but we tapped into this key support level while trading in this demand zone as well and holding up demand. So once I saw that bounce off of support, and you may be saying, well, you could have just taken it right off that bounce. I could have, but there's not as much confirmation of that area. So I'm not going to be taking a trade off of a bounce like that because it's not, as confirmed. And then this was my exact entry because we were getting a break out of this demand zone. We were holding up our support. And we also had another key resistance level around this 517 area as well. And then I targeted up to our next supply slash resistance level into this 521 area. So I can't show it as well with options, but I'll show you guys like this is the trade. These were the 517 calls. These were zero dated. As you can see, when I take my contracts, I will enter in with multiple contracts and I will, slowly take profits just to, manage my risk and makes the position, a lot easier on me as well. So, yeah. Okay. That was a lot. How are you guys feeling? That has been about an hour worth of stuff. How is everyone feeling? Let me know, guys. We feeling good? Amazing. I love it. I love to hear it. So I'm going to walk you guys through a real trade. Yeah, they won't teach you this in finance classes in university. Trust me, I'm in finance in university, so I'm not learning this. But yeah. No, no, no. Okay, so I don't start with one contract. So I will enter in with multiple contracts, and I will scale out my position. So I will exit contracts. You know, first time I usually will take exit on my contracts is depending on the trade that I'm currently in. In this one, I believe I did get chopped around a little bit. So I initially took some contracts out around 10 to 15%. And then I held the rest of my contracts because these were what's called runners to 50 and 60% on this trade. Yes, we will. I'm going to show you guys like a real example. So of support and resistance, supply, demand, and how they work. So if you guys want, I can go over my Coinbase trade I took yesterday, or the one that I took today and why it didn't work. That's really helpful as well. So, how much do I use per options trade that I'm in? I don't want to answer that because it really depends on how much you have in your portfolio, is how much you are going to be entering in contracts. I never dollar cost average my losing positions for options. For shares, absolutely. That's, super smart to do. But for options, again, I'm generally in, day trading positions that I'm looking to close before the day is over. So I'm never going to dollar cost average those plays. I'm just in those with my initial risk. And if my stops get hit, my stops get hit. The smartest way in growing a small portfolio is going to be going for base hits. So what I mean by that is, one, don't take very expensive contracts that take up your whole account size and then, set your stops at negative 20%. That's never a good idea. You are going to lose a good amount of your portfolio doing that, and you're going to lose it quickly. So take trades that require much smaller size, and take base hits. Be okay with getting 10 to 20%, 30% on trades. I know through social media, you guys see a lot of people, they hit these huge option plays, 100%, 500%, 1,000%. When you have a small portfolio, you can't try to be going for those trades because they are much more high risk. And, trust me, I would know that trades like that are higher risk. So be very careful when growing a small portfolio. My stop losses are normally going to be set at negative 25% on my day trades for options. It depends, sometimes negative 30, sometimes negative 20. Depends how big of a size I'm going in with, depends how confident I am in the trade. Normally, I'm pretty confident in my trades, obviously, but yeah. Okay. Any other questions before I go over a real live example? So I'm going to stop sharing this for a sec. Okay. And now I'm going to pull up my trading view so we can then get into a real example. And you guys, if you guys want to pick a stock vote, so the first, general resistance level that I would mark out for QQQ and the one that we saw, tap a ton of times is this 521, 82 level. So we've seen this multiple times, and don't ask me to use the ray on TradingView. I absolutely hate the ray, and that's why my line is not going to be straight. But I'll make it as straight as possible. So, okay, as we see right there. So this was a pretty strong resistance level until obviously this area on Wednesday, May 28th, we ended up breaking above it. And then Thursday, we came back into it and closed below it. And right now, we're currently sitting just under it. So what I'm generally thinking is this is a pretty strong level, obviously. We've had multiple candle taps upon it on the 1 hour time frame. As of here as well. We did get a break above it and then trade back into it and got a small break here and traded back into it. So that is going to be the first level that I'm really marking out for this. This is 521.58 level on QQQ. Next, I'm going to generally mark out our supply and demand zone and also a support level. So first, let's mark out a general support level. So let's go back a little bit. So one area that I see, that we've touched a couple times as well is this area right here at around 511.80, 511.89. So as we see, Q's kind of generally traded within this range. So there could have been multiple trades you could have taken off of this area. And the general first zone I will mark out for supply is going to be right up here. So as we get like multiple consolidation candles within this area, we're right at, our resistance level as well. We see that very nicely, okay? So awesome there. This is our supply level. This is resistance. This is support. So now to mark out our little demand zones, which demand isn't showing up just as much as, we've seen supply in this exact example, but we have a very nice demand zone from this 512 to 514 area on QQQ. So let's go into the 5-minute time frame. Okay, awesome. So we marked all those out on the 1 hour. Okay, making sense. Any questions so far? Let's see. I did not start with fundeds. I'll answer that right now. Okay, yeah. I do analysis for AMD. You're stuck in 141 put. That one's tough. I'll try to help you with that. Give you my best advice. It depends what, AMD is or your put is currently at and what price it's at. So this is market open on Wednesday. So the 6:30 because I am Pacific time. So 6:30 is this Wednesday, May 28th market open. So as we see here, price kind of chops us around within this supply zone. So there would be no obvious entry for me to, try to target a, rejection off of supply. And there would be no obvious like real breakout. This would, potentially be the only spot, but this isn't, really strong enough for me to take. But yeah, then we kind of dropped right back into our supply zone after we initially broke out of this resistance and supply zone. Again, not super strong, not enough for me to take, this move up. It was only about like $1 move. So that's not something I would initially be targeting. Then we kind of got chopped around for the rest of Wednesday. So there's absolutely no trades I, potentially would have taken there. Then we did get another reject again at this 521 level on QQQ near end of day on Wednesday. But we still traded within supply, right? Okay, awesome. So then overnight on Wednesday, we made a massive move up. I remember there was some news, but now I forget exactly what it was. And then we traded right back into the supply zone, right? As we see, market opens right here. Initially, we first drop right back into supply. We continue to move into supply. We're kind of now trading within this area. But now I see something really important. And this was on Friday, May 30th. So now we're trading back at this, support level. We're trading back at this demand zone. So pretty interesting there. So if I move us back a little bit, mind you, I can't now we can't see the rest. So let's test this out. We're on the 5-minute time frame. I would not enter off this initial bounce on support because we got this massive downside right and early in the morning. Kind of chopped around for a little bit near market open right here, and then got this really nice downside. We got this bounce, which is really interesting on support. And now what I would initially be targeting is this break out of the demand zone. Now, mind you, we may just continue, we may chop within this demand zone area, and that's where I wouldn't be taking a trade. But if we just, look a little bit on the chart and see what happens. So this candle is not something I would enter off of because we did not get a full candle close and break out of our demand zone, as we see right here. We could clearly just make our way back in, chop around a little bit. So what would I be waiting for? A candle to close above this area. So let's play it once more. Okay. No breaks. No breaks out that area. Okay. Now we see a candle actually close above this area. Now, I'm going to be waiting to see this retest, which is going to be this candle right here as it's now trading back into the area. We'll see if we test it and then continue up. So if I put buy, and obviously I can only do shares for replay. I can't do like options. So going to just have to bear with me through this. But let's say we're trading at 514 on QQQ and I want to be targeting, let's do a little long position. This is my entry right here. And I want to be targeting up to this 518 area back into our supply zone. This is where I'm going to take entry. Let's say my stop is negative 25%, whatever. Let's say this is negative 25% on options. And I pick out, 515 zero dated contracts. So let's play this and see how this goes. So now we get that retest. We get nice retest, and now we get a full hold above and into my take profit. Does that make sense? So that is using support and demand. I don't use Thinkorswim, but it's totally a good platform. Yeah. All right. Does that generally make sense? We have now been on here for a long time, so I'm probably going to, I kind of want to show one more example of like when this wouldn't work or like when you don't want to take an entry. I would really, really love to find that. So let's select a bar. Let's go back. Let's go maybe back to this area. Okay. Oh, okay. Let's select, shoot, that's overnight. Okay. Let's select back to this area on Wednesday, May 28th, and why this trade is not something that would have worked. Okay, so as you see, market near open at 6:15, We're holding above this supply zone at around 518 to 521, and we're holding above our resistance level at 521.70. So now we're holding above that area. And first thing I would want to do is potentially mark out some other, oh wow, that's really not straight. Let me try to straighten that a little more. So the first thing I'd want to do is mark out some other areas above there initially. So we don't really see that in this time frame. So we've got to go back, got to take a look at, maybe the 4-hour or the daily. Okay, so taking a look at the 4-hour, another area, and for this, I guess I will draw a ray. So an area that I would be targeting after we did break out of there is initially going to be this, our next, resistance level up. So I would initially try to be targeting this 527 area, 527, 36 area up here, which is our next, level. So let's drop back into the 5-minute time frame. Okay, so now we're holding above here. Market is near open. Let's say near market open, I want to enter a trade. So let's wait for the market to open. Okay. Market opens right here. Now we're nicely holding above. I want to enter. All right, great. And I'm going to try to target, up to that next area. There we go. Now I want to target up to this next area. Okay. Let's say I'm in QQQ calls for 526, 0 dated. So we're holding above this area. We're holding above. Oh, and we get stopped out. Oh, dang it. So why would you have not taken this trade? Why would I have not taken this trade? So right when the market opens, we're already holding above my level. And there's no clear confirmation there. There wasn't a break out of that level. There was just a hold, and price was generally pretty weak. And you would have noticed our trend was mainly choppy. We were mainly still trading within this area. There wasn't a good sign of us getting a breakout, and there was probably some economic news you had to be watching as well. So that's an example of when it doesn't work. Yes. So okay, that was probably a question for the other example. Once it re-entered the supply zone, that is where I took profits. But yeah, okay. This has been a very, very long session. And I want to make sure, I get all of and any of your questions answered. So I'm going to stop sharing and all right, how are we all feeling? That is, all I'm really going to do for right now. But yeah. I don't know. We'll have to see when my next webinar is. So like I said, I do have something really important to announce for you all, but I do also want to, first of all, give a shout out to all my wonderful students that I have that are so amazing. I want to give a shout out to all of you guys and really thank you guys so much for joining me today. I know this was a really long webinar session, and I'm really happy, to be able to teach so many people all at once. Nothing really makes me happier than that. But before we get to any more questions, so oh, are we still going? So I will be answering that question shortly. Okay, if you want an explanation about price action, I will. You will have to rewatch this. I explained price action more at the beginning of the session, just so you guys know. But yeah, so I do have a very exciting announcement for you all as well, and I do want to quickly show some of my students' gains that have been doing extremely, exceptionally well. from actually, following the strategy, putting the work in, which is the most important part, to trading. I have this one student and I did make him an entire 3-month plan. He joined my Discord. He was he was struggling a lot with, psychological, with strategy. He was a, heavy gambler, would just gamble his options trades. And I gave him a 3-month plan. He worked his ass off and he's still currently paper trading, but he's doing a really, really amazing job with it. He's following the strategy. He's taking maybe 2 trades a day. And he's using risk management. He's not gambling anymore, and he's doing just a phenomenal job. So big shout out to him. And we have a few more, of my students that are also doing a really, really awesome job taking levels, utilizing my strategy, utilizing exactly what I teach them to their best and fullest advantage. And I do want to clarify, I don't give out callouts. It's not beneficial to anyone. You have to really understand strategy. If you want to make it in trading, you can't just take callouts. That may work for you for the short term, but it's never going to work out for you in the long run. And too many, people who get into trading just think short term, short term, short term. You have to think about the long term. Trading is a business. You have to treat it like a business. You have to treat it like what it is. And learning how to trade and picking up that skill is so important. So that is exactly what I teach and what I'm teaching you guys today in this webinar, and why it's, so important. And talking about strategy as a foundational part is just so extremely important, because you have to relay back to basics of strategy and understand that. So, I mean, these are just some more gains. But again, like I said in the beginning, if you're having any psychological problems with trading, that is most likely, and that is due to the fact that you don't have a real strategy locked in. You don't trust in your analysis, you know, all of that good stuff. So, anyways, do you guys have any questions about everything I just went over? Is there anything you guys personally want to ask me? This is the time to do it. Absolutely anything at all. Appreciate the wall compliment. Thank you. So that is the exciting announcement I do have. So I am opening up my Discord once again. I'm not opening up just yet, but for all the people who stayed this long and joined the webinar, I am opening it up to you guys, giving you guys early access to the webinar. Sorry, to the Discord, not to the webinar. And all right. And that was the end of my webinar. If you made it this far, congratulations. Good job on that. That means you're serious and you want to become a real day trader. And I freaking love it. Keep up the hard work. Continue going. You can do this. Trading is really difficult, but I believe in each and every one of you. And I hope I get the chance to just continue teaching you guys, because there's nothing else, that I like better than teaching. That's why I do it. But anyways, I will see you all later.